The oil markets remained tight in calendar year 2022 as demand exceeded supply. While Brent crude prices topped $120 per barrel mark earlier in 2022, analysts believe prices could have been higher had oil reserves from the Special Petroleum Reserves and OECD inventories not been released, and if China had not been in lockdown all around 2022. For now, a host of factors have been holding up prices. For one, OPEC and its allies decided to cut production by 2 million barrels November onwards. Second, the Group of 7 or G7 countries, along with the European Union and Australia, have agreed to set a limit on the price of Russian oil at $60 per barrel. This, along with the ban on Russian seaborne crude oil, has cut oil supply by another 2.2 million barrels per day. Against these developments, how does 2023 look for oil markets? Paul Hicken of S&P Global Commodity Insight thinks the year could see significant volatility in the energy market.
The oil market in 2023 is likely to show a lot of volatility, continuing that trend from 2022. Three big known unknowns are likely to dominate market sentiment and create that volatility. The first of all is Russia. Now, from a Commodity Insights perspective, we see Russia sanctions supply losses peaking at 1.5 million barrels a day versus pre-war levels by February 2023. But Russia's sanctions uncertainties are very high, given issues around enforcement, tankers, and who will continue buying, and how the grey market will operate in that sense. Second is China. Everyone through 2022 was talking about demand coming back from China at some point when lockdowns end. But there's been no signs of lockdown ending, and from when we talk right now, that's still the status quo of huge lockdowns in China, and that is a big blow for commodity demand and oil demand. And add that to the whole global economic weakness and recession, this is going to be the second big factor shaping the markets and buffeting the oil market around. And thirdly, how OPEC Plus responds to this, and OPEC itself responds. We've already seen production cuts from OPEC, but there is a tension between the consumer side and the US, and how much they're comfortable with high prices, and how much OPEC Plus is looking at the fundamentals and looking at potentially putting some kind of floor under the market. As
analysts believe Brent crude may hover in the price range of $80 to $110 per barrel in 2023. Those at JP Morgan, for instance, see Brent prices averaging $90 per barrel in the year ahead. The price forecast rests on the belief that OPEC Plus alliance will do the heavy lifting to keep markets balanced next year. Besides, supply will grow at 30% above the pace demand in 2022 as Russian production fully normalizes. Also, supplies from conventional players like Brazil, Norway, and Guyana, along with non-conventional ones like the US, Canada, Argentina, may add 1.6 million barrels per day. Paul Hicken, however, sees oil a tad lower.
We see oil prices in a volatile range around the $85 a barrel mark through 2023. Without doubt, prices will jump above that and below that, but that looks like an area for prices.
Meanwhile, markets will track the US Federal Reserve's monetary policy meeting this week. Back home, foreign fund flow, oil prices, IPO of Sula Vineyards, inflation data will guide investors' sentiment.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.